Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, June 10th. Mostly lower trade across the ag space here overnight. Wheat prices are leading the declines, currently down about 5 to 7 cents. Corn prices down 1 to 2 with weakness in the old crop. Soybean complex, that's firming up here a little bit here as we head closer to the pause. Beans right now are 2 to 3 better. Bean oil is up 35 points, while meal still down just under $1. Pressuring wheat prices is better than expected conditions here in the U.S., combined with an improved outlook for Russia's 2025 crop. Russia's deputy prime minister, they stated overnight that they expect this year's grain harvest to reach 135 million metric tons. That's up 7% from a year ago. Here in the U.S., winter wheat ratings, they improved 2% to 54%, good to excellent. That was versus expectations for no change. Spring wheat ratings also improved. They were up 3% to 53%, good to excellent. The U.S. winter wheat harvest has been slowed here with rains here in the southern plains. Advanced only 1% last week to 4% complete. That's the slowest pace now in 4 years. Ratings, I have them as the highest now since 2019. USDA has raised their winter wheat production forecast every year in this June report in the past decade. I see no change to that this year. I'm up 13 million bushels to 1.395 billion, and that is just slightly above the average trade guess. Corn ratings, they improved 2% to 71%, good to excellent. At the high end of the range of guesses, I had conditions improving in 13 states while declining in 5. Overall ratings remain just above their historical average, however, a touch below a year ago, and I think there's a good chance we'll see further improvement next week given the seasonal increase in temperatures now. I do look for a 25 million bushel cut in old crop ending stocks. This because of a 50 million bushel increase in exports, partially offset by a 25 million bushel decline in feed usage. Bean plantings hitting their home stretch now at 90% complete, holding just above a year ago and the 5-year average. Ratings improved only 1% to 68%, good to excellent, in line with expectations. I had ratings improving in 8 states, declining in 8 states, while holding steady in 2. According to U.S. Commerce Secretary Lutnick, trade talks with China are going well as they progress now into day 2 of their talks in London. July corn, that hit a new 8-month low here overnight. Next support is at 426.5. That is the low from March on the weekly bar chart. So far, DEES is holding above its May low at 434.25. Favorable conditions here, combined with expectations for higher production in Brazil, continue to weigh on corn prices. So far, DEES corn at peak this year just under 480, which happened in the month of February. You'd have to go back to 1982 before you found a year where DEES prices peaked in the calendar year of expiration in the month of February. July beans, they scored a new daily high above the previous session's high now for the 6th consecutive session. Resistance is at the May high at 1082 with support just below the market at 1050. Nove beans are stuck between its 50 and 100-day moving averages. I see no change in old crop or new crop ending stocks for soybeans. Bean oil trade there is holding just below its 50-day moving average resistance at 48.30. Still awaiting info on RVOs. July wheat rejected trade yesterday above its May high, falling back to about the midpoint of its 8-week range. Similar story for Kansas City. I look for old crop ending stocks up 10 million bushels on lower exports. I do see little change in new crop ending stocks with higher exports offsetting the higher stocks from last year and the higher production. Thanks for listening, everyone. Have a great day.